Hey everybody, I'm Jason Foreman and I'm here with Chris. I want to say your last name correctly.
Fenoglio.
Fenoglio. And I'm a real estate agent in Los Angeles, and Chris is a mortgage lender. So how are you doing, Chris?
I'm great, Jason. Thanks for having me today.
Yep, I've seen you on Instagram, really cool videos. And what I
Thank you.
like about your videos, cool style, very straightforward. But you're also not sugarcoating exactly what's going on. I can't wait to get into that. Let's talk about what's really going on.
For
But
sure.
before that, Chris, a little bit about you. You're in Orange County, Huntington Beach, right?
Correct. My office is in Seal Beach.
Oh, I love Seal Beach. Okay.
So I get to drive the PCH Coast Highway on, and I'll probably every other day I get to see dolphins swimming right there. They go from Huntington to Seal Beach right about the same time I drive down the coast every day. Not a
Oh,
terrible drive.
how far is Huntington Beach from Seal Beach?
8 miles?
8 miles.
Yeah, no.
Nice. Yeah, we should say hi because like maybe every 2 or 3 weeks we go down to Seal Beach and just get a
There you
hamburger, grab a coffee, just hang out. So many
go.
good little bakeries there.
That place is, I love downtown Seal Beach.
Oh, it's the best. Okay, that's cool. I didn't know that. So how did you break into the real estate biz? What made you want to do it? How'd you get started?
Coming, as a kid growing up, you don't ever think about finances or real estate. And honestly, I ended up following a buddy of mine. I played water polo in high school and college. He ended up at Wells Fargo Bank. I went to Wells Fargo Bank and I was a banker, just slinging checking accounts and home equity lines. And I'm sure you heard about how much trouble they got into. And this was the early 2000s. And
Oh yeah.
yeah. And so the mortgage guy would come in once a week or twice a week, drive a nice car, and rates weren't great. They were still in the sevens. But I was really always interested in his side of it because I was doing home equity lines and he was always doing the mortgage. We saw rates drop. I kind of started helping him. And then literally he grabbed me and I was the first junior loan officer ever at Wells Fargo Bank.
That
Because
is cool.
I was young in my early 20s, and he's like, "Man, you hustle." And I'm like, "Yeah,
Um,
I was like, I don't want to get 3 cents for a checking account when you can make X dollars on a mortgage." I'm like, "That's
yeah.
where it's." And so
Whoa, what
that's,
a cool
yeah,
opportunity at a young
yeah.
age.
And so like I was there for a good amount of time, and then I moved to another bank, and then I went independent and became, direct lender or broker type of model for, the last 11, 12 years. So 20 years total. October 1st is 20 years.
In the business.
Yeah.
How long have you been doing your own thing, leading your own team though?
11, 12 years.
Sweet.
12 years.
Wow.
Yeah.
Wait a second. Before you get your lender's license, when you were just a banker, you could do a home equity line of credit?
I
I
was a
didn't
bank.
know that.
Yeah, I was
Okay.
doing home equity line of credits. And then I went into, yeah, and then I only did that for a few months. And then I went to the mortgage side as fast as I could. I think I was only banking 8 months at that.
You definitely need your license to do a refi, right? For sure.
I don't know. Like, I feel like the banks have a federally charter license or something that you go under them. I think they still
Okay.
have a test for them. I don't know, but my world, yes. Yeah,
You
you have
could,
to be licensed in every
yeah,
state.
probably be best to speak to an actual mortgage broker. Yeah.
Yeah. Well, yeah. Or if you're going to go the bank route, go talk to them. I believe they have a test or something, but for us, we're, 8 hours, just like you guys. Yeah. Multiple tests you have to do and every year and that type of stuff.
Nice, nice. Okay. So, getting into more interesting things, what are you seeing in the real estate market recently, especially in Huntington Beach?
So I pulled some numbers for Huntington Beach and Long Beach.
Hmm.
Those are the two counties I work in mostly. We're seeing significant price reductions. I
Hmm.
would say almost 50% of every home that's listed has a price reduction. Now, if it's in a little pocket area where there's no other competition, we're actually still seeing multiple offers.
Okay. Yeah,
But
same here.
right in these little pockets where there's maybe 300 homes in a pocket and it's a super nice area with a school district that everyone wants, those homes are
Mhm.
going. But if it's in not the greatest school district, not the greatest area, and there's 7 or 8 homes on the market, they're just competing against each other right now. So this is the
Wow.
first time we've really seen this much of movement in housing in the last, I don't know, how long has it been for you, right, that you've
12
seen?
years.
Yeah.
We've been spoiled for like 12 years, just going up and up and up. And then 2019, and then the pandemic we thought would maybe hurt it,
Right.
just skyrocketed after
Did see
2020.
like a 30-day pandemic quick drop. I don't
Oh
know if
yeah,
you saw that like
I
quick,
sold a
quick.
home in that drop too. Yeah, we could hardly do open houses,
Mm,
and my seller had heart conditions, and she was over 65, and I was
oh,
really strict on all the people coming in, and I wiped down with bleach every little because I didn't want to be responsible. I'd feel horrible if anything bad happened to her, for
right.
sure.
Yeah, yeah. It was and then all of a sudden, inventory was removed from the MLS, and there was no one selling homes.
Yeah,
And then they released you guys to start holding open houses, and then
yeah,
I mean, supply and demand. That was like the biggest supply demand we've ever seen in our life. And you had people locked in, living with their family, their parents, their one bedroom apartment, couldn't leave their house. Buyer demand just went crazy. Who,
yeah,
imagine living in, you're living with your parents, saving up to buy a house, and all of you work, but you guys see each other on the weekend, and all of you are stuck in your home for the next whatever 2 months, and you are right next to each other. That was what I saw the biggest demand. People are like, I
wow.
have to get out of this house right now. And so you saw that first generation of first time home buyers, millennial buyers go, I'm going to go buy a house now. And it was
Good for
because
them. Take
they wanted to
advantage.
get the heck out.
Yeah, and the prices went really high, and the rates were really low at that time, right? They were incredibly, like,
But
sometimes below a three.
yes, so yeah, so
Prices went down.
2020, like uh, we saw a peak. We saw actually like a 5.875 rate because the market was super weird. The Feds came in and said they're going to lower rates to zero. They lowered rates, and then it just went like 4.875, 4.5, 4.25, three. And then, I mean, we saw all the way to 2.5. Like
Yeah,
I literally did a 30-year fix, probably 30 of them for a
yeah,
3 week window at 2.5% with
that's
no
great. That's
fees.
wonderful.
And I
That's
like literally my email would be the same. You hit the jackpot. You're never refinancing this loan again. Blah,
yeah.
blah, blah. Done. I'm here for all your other real estate needs. If you need home equity lines, loans, or buy other homes, but don't ever call me to refinance this thing because I'll tell you.
Sure. Yeah, maybe take out a home equity line. Yeah, if the
Right.
rates are good again and you
Yeah.
want to buy an investment property. Oh
Buy
man,
investment property. I'm like, but you're never touching this 2.5.
wow. So were those mostly young people who bought a home, or were they like older people and they really just refied and locked in a
I've been
really
in
low
it
rate?
20 years, so I have my clients from the past that have
Uh-huh.
gone from home to home, and then I have their generation, their children, right? So I do get a lot of first-time home buyers. Most of the time, the parents are helping them. They're co-signing, giving them down payments, and
Oh,
going,
it's so expensive.
we,
People need help. Yeah.
oh, yeah. I would say the last 2 years, I saw more gift money from parents
Hmm.
than the first 18 years of my life.
Yep. Almost
Every single
everything the
transaction.
last 2 years. Yeah.
Yeah, every
Same
single
here.
transaction. And I think the parents were like, I need you out of here, or I want you to own a home and I'm gonna help you. And so that was great. I mean, it helped out a lot of people.
So Chris, currently the interest rates for a 30-year fix, the national average is above 7%. How do you feel about those rates? What do you think is going to happen to housing prices based on those rates? And what do you think will happen to rates in the next, I don't know, a few months or next year or two from here?
All right, let's take national average of 7%. When you
Okay.
see that, that is true, but that's not for every client and not every
Oh,
scenario. We have never seen such a wide spread. And I'll give you an example. Yes, rates, a conforming loan, someone buying a home under 700,000, they're putting 5% down. You're probably going to see a rate at 6.875, 7% with fees and cost.
okay.
You have a borrower that can go 20% down and they fit into a higher tier loan amount. And we call that the jumbo world,
Mhm.
which usually jumbo was always higher than conforming. It's flipped, and it's been flipped for about 3 years. You could still get rates that start with a five, maybe a low six in front of it. So we're
Oh,
seeing a huge spread. And that's why I tell clients, I'm like, used to be like, don't worry about it if you don't have 10 or 20% down. It's not that big of a deal. Am I? Well, it's a huge swing now. And that's
yeah.
where if we could get money and scramble together and get that 20%, you're seeing a huge difference. The other thing is investment homes and second homes.
Mm,
Those rates are they're
higher interest rate.
they're much higher.
Yeah.
You used to be able to buy a second home a lot of people were doing this, buying second homes, putting 10% down and get the current owner occupied rate. April of this past year, Fannie and Freddie decided there was too many people were buying second homes, turning into Airbnbs, which is
Mm,
a huge thing. They
mhm.
decided that we're not doing this anymore, and they made the cost ridiculous. I couldn't. I think there was one was asking me, it was like 8%, and they had to pay 2 points for it for 10% down second home. I'm like,
Wow.
That's just not happening anymore." And so
Wait, how
that
do they crack down on people buying it as a second home and then renting it out or Airbnb? How do they crack down or find out?
They don't crack down on it. They just saw that what happened was they get all the data and they go, okay, all these people are, Joshua Tree, Big Bear, Lake Arrowhead, Palm Springs.
It's a little obvious. That's a vacation getaway. Yeah.
You could get away with 10% down as long as you live in the property 14 months out of a year.
So people will
So if
probably
I,
just do
yeah,
that.
that's
Yeah.
not, like that's no big deal. If I bought a home in the mountains, I would use it 14 times in 1 year, and that qualifies as a second home. And so we saw a lot. So they get the data. Fannie and Freddie go, all these people are buying second homes and they're Airbnb. They're really rentals. They're truly using it as a rental
Yeah.
property, a housing hack, right? That's the term.
Uh,
And so they basically said in April, and they ripped the Band-Aid off and said, no more of these. And they made them super expensive, which now you're seeing those markets really level off. You're seeing that.
oh. Hey,
Yeah,
is that maybe why Airbnbs are more expensive now?
true, true.
It's not the deal that it used to be.
No, no, it's not the deal it used to be. And so we're seeing a lot of that. So that kind of rate answers those questions on the rates. What was the second question?
Housing prices, what do you see in the next few months or the next year or two?
So next few months, I still think like market, right? Everyone says you got to, how do you time the market? You can never time the market. You can never time the
Right.
top or the bottom. You realize that March of 2022 was the top. We didn't figure that out until June. Right. And we're like, oh, that was the top. That was so crazy. And now where's the bottom? We're not, I think markets are hyper sensitive to areas. Like some areas have multiple offers, you still supply versus demand. Areas that have more supply, less demand, we are going to see a housing drop. We've already seen it. I think San Diego dropped 7% or 7%. And I think that was like a 60-day window. Our area here, Huntington and Long Beach, we're already seeing housing come down. Is it
Mhm.
coming down 300-400? No, it's not. It's not
Mhm.
2008, but homes that sold for 1.4 million, they're
Mhm.
probably going for 1.2 now. So that's a
Okay.
significant drop, but you're taking 1.4 of March of 2022, lowest rates ever, no inventory, no supply, right? You got to realize you're actually getting probably a slightly higher payment buying at 1.2 with today's rates. So it's one of those things where everyone's like, well, those people that bought, I'm like, yeah, they still have a fantastic rate. And as long as they don't plan on going anywhere, they're totally fine. So short term, I still think there's some movement down a little bit, depending on the area where it's at. I think there's deals. And what I mean by deals, there's opportunity out there. And I'll give this to you. If you have
Mhm.
investors, this is the time investors are back starting to buy homes. I'm finally seeing it. 35% of every home sold last month went to an investor. We haven't
Wow.
seen investors since probably March, April, they backed out. And
Yeah.
what you're seeing is I call it the ugly homes, the homes where they're vacant, they have no work done to them, uh, price reduction, there are all kinds of stuff going on. If I'm an investor or I'm a buyer that wants to get into it now and I'm worried about buying and it comes down a little bit more, that's the home I'm chasing. Buy the ugly homes, right?
Uh,
No one wants them. No one wants
yeah.
them. If you're willing to do the sweat equity, you're going to turn around quickly for those if you're trying to make a profit. Now, if you're just trying to buy a home to live in a neighborhood, this is that chance. This is that like little I think I'm going to say 6 months. I'm going to say the next 6 months. This is your chance to really get into it. It's not a credit card. It's not an asset. It's a home you're going to live in. You're going to raise your family. Your kids are going to go to the school district. You're going to have Thanksgiving, Christmas at your house. This is if I'm a buyer and I've been on the sidelines. Even I understand rates are high, but take the emotion out of that. This is my chance to own a home without as much competition. So if I'm a buyer, I would be really, if I'm a young family ready to make that move, I'm not going to go, I'm going to wait until rates come down because then I'm going to compete with everyone else again. So that's my hedge on it. That's why I'm telling everyone that's what I would do.
Rates are going to come back down. We've got
And so,
less
and
than 1 minute. Less than 1 minute's gonna shut off. But I'll just open it up again once it shuts off.
okay. Or do you want to just pause now and then we'll ask that next question?
Oh, okay.
Yeah.
Yeah, I'll pause now.
Cool.
All right, and then so we'll just come back to the Zoom. All right,
So
cool.
you have the same thing as me, the 40-minute timer.